So this video is sponsored by Pionex, one of the exchanges I use all the time. It's one of the main crypto brokers to Binance, so the volume is very high. The main thing that sets them apart though is that you can use free trading bots, a variety all designed to benefit from different market behaviors, whether that's up, down or sideways. You'll get 20% off all your trading fees for life with my link in the description. And if you join the Telegram, a lot of us already use it, so if you've got questions we can try and help you out.
Hello everybody, welcome back. Let's have a look at Bitcoin and again Euro. Obviously, the FOMC took place yesterday. We had a little bit of a mess about, and then we ended up making a new high, a new local high for Bitcoin, obviously pulling back a little bit at the moment. Now, when it comes to central banks, the ECB are going to announce their rate hike today, almost guaranteed to be a 50 basis point, which is why I think the rally on the euro and the weakness of the dollar compared to the euro continues in the specific direction that it is, and again all assets continuing to go up. Now this is still good, so we'll focus on just the charts, really forget about all that because we talk about that enough. So as far as charts concerned, looking at Bitcoin here, we've got some nice rhythm. We've started to retest some of these lower moving averages and getting picked up on them quite nicely. This is the case for almost all the altcoins we were looking at as well. They're all getting picked up from significant areas, mostly the 10 exponential on a daily, but Bollinger Band centers on on 4 hourlies. I was choking on my own tongue there. So with that said, you know, we should treat the charts appropriately, and you can effectively still continue to buy the dips at this point forward. Now the ECB doing their thing today, I would imagine, is going to emphasize the weakness in the dollar versus the euro, but we will see. But even though I expect that to be the case, it's still going to be a little bit all over the place as far as today's price action is concerned. You know, a little bit volatile, but the charts are going to speak, and the charts have spoken, and what the charts are speaking about at the moment is that we've broken this area, this 23,300 area, and since we've broken it, we might come down for a retest of it over the next few days. That would be backed up by the 10 exponential, which would be a decent buy the dip opportunity for at least just a scalpy trade. And we'd probably be looking for the Holy Grails to be tagged at this point now. The Holy Grails on the weekly, which is going to be sitting around 25,000. The 200 exponential, the 200 simple moving average, is facing up. So this is still in an uptrend as far as direction is concerned. We've gone down below it for the first time ever, but you know, it's not curling down, so it doesn't signify, you know, a big problem yet. However, we do want to reclaim it, obviously, and if we want to reclaim it, we better reclaim it over the next couple of months or so, I would say. Well, probably more than that. Between now and the summer, I would say, we want to try and reclaim that, because it will have a negative slope on it by that point. It's a very lagging indicator, very lagging moving average there. So, long story short, 23,300 now becoming the support to which we could think about the first buy the dip opportunity on this. And when it comes to altcoins, they're also moving with the market, emphasizing that of Bitcoin's moves. These aren't anything particular. These are just left over from the live stream that we were doing. But yeah, they're all basically lagging behind Bitcoin's actual charts. So Bitcoin might not appear to be moving better or more constructively when it comes to price action. But it is. Altcoins have been significantly wrecked, but their charts are less healthy. These aren't anything to focus on. These are just what's left over. But we can see in the case of HBAR, still struggling with the 200 exponential on the daily. AR, which we highlighted as one of the better charts from Tuesday's live stream, really powered on through. So, I mean, from yesterday, it just went absolutely crazy. Always talking about the 10 exponential. That revisited the 10 exponential, did a 22, almost 23% move in a day. So, but still, when we're talking about the position of price action to moving averages, still not as good as Bitcoin's, which has left its 200 exponential, you know, way behind now, all the way down here at 21,000. So, Bitcoin more constructive chart, even though it might not be giving as much back. You know, slow and steady wins the race, basically, is the motto that should be taken from the price action of this current run. Slow and steady is winning the race. Bitcoin has done pretty well for itself since we said it was going to run to at least 19,500 or whatever it was that we said it was going to do. And it did do that. And now it's going to continue to do more, I would say, looking to hit that 25,000, maybe even a little higher than that. Now, obviously, like I said, today we've got the FOMC, not the FOMC, the ECB talking about their rate hikes. It's going to cause some messing around on these charts. But look, the euro is super bullish, very bullish. This is just a 4-hourly. Take it to a daily. We can see how bullish it is. We've finally broken that area now. So the pullback came down to the Bollinger Band center and then shot straight back up. So people are buying into this euro. It's very aggressive buybacks on this euro. Very difficult to want to short this now, to be honest with you. Not to say that there's not money in the shorts. At some point, I would expect a pullback into this 200 exponential, but fundamental basis is taken over, and it's become a very, very strong trend. And we recognize that the trend was strong. However, we've always been looking for a deeper pullback. We got this one. I thought we were going to pull back a little deeper. We didn't. We got this one, which was really nothing. And we're going to keep going and keep going and keep going until a natural consolidation forms. Not just for euro, but for everything. And I think that's the thing to focus on now, right? So we look at this daily for Bitcoin. We don't look particularly overheated. We do have bearish divergence. We still have bearish divergence on the daily. This sort of behavior is not concerning. It's normal when you're thinking about reaching a local high on this at some point. And then a consolidation will naturally occur to reset the oscillators and the price action and test lower moving averages to make sure that they are, well, to make sure that they're real. At the moment, they all are acting accordingly. We're getting picked up on them, which is perfectly fine. And same thing with altcoins, same thing with euro. All these moving averages are being used appropriately, and we're just going to higher high, lower high, and so on and so on and so on. So building constructive uptrends. But there is a shadowy figure in the background saying consolidation is required at some point soon, and the higher we go, the longer the consolidation will be, the deeper and longer it will be, which will make for a very boring market really for spot traders. So I'm still, like I say, cautious when it comes to how high this is going to go in the short term. But just like 2019, if anyone was around back then, you know, I was lucky enough to buy close to the bottom, below 4,000, and I was, you know, pretty sure that 10,000 would find a big rejection, and it didn't, and it continued on and effectively popped really at 14,000, and then went into a 6-month consolidation followed by a black swan. So we just do have to be aware of this kind of behavior. This area over here, the 25,000, backed up by this peak over here from back in August last year, also has a horizontal area of significant rejection. So we can think about this area maybe being a bit of a trap, right? So the fundamentals when it comes to Forex favors further downside for Dixie, favors further upside for euro, and that favors upside for stocks, indices, and probably even crypto, obviously, through association with all of that. But the charts do offer certain areas of rejection around this $25,000 zone, maybe a little higher. And if we do spike higher, there's absolutely nothing from this 25,000 area all the way up to around 28, which would, you know, as far as I'm concerned, you know, be extremely squeaky bum time, and we'll probably start to see some realistic shorts stacking at that particular level. And it's the stacking and layering of reasonable positions of shorts that create and emphasize the long consolidation which might come after that. So we might be talking about several weeks, maybe even more, depending on how high we go, of downside consolidation, and that would be for everything, you know, S&P, euro, Bitcoin, the lot. But for the moment, everyone seems relatively happy. So upside seems the more likely scenario. And as soon as we start to get above 25, you could expect a wick strong move all the way up into the 28,000s, where we would probably find a bit of a pop. Again, you know, heavily speculated there, but you know, based upon previous price action and projection for currencies, it seems reasonable to expect that something along those lines is more than possible. To be honest with you, this is actually kind of quite likely. But you know, if we're going to pull back today, 23,300, the breakout area from yesterday, and the previous areas of resistance from the last couple of weeks, more or less. That's where we want to focus on. If we lose that area, then we're back down into the lower range, and it could cause the consolidation that we might already be at that consolidation as we speak. either way, everything looks very good still, and very encouraging. And yeah, enjoy it for while it lasts, really. Anyway, I'll leave it with you there, but thank you for watching. Hope you have a nice day. Take it easy.